Nvidia stock is reaching all-time highs again, trading at $144 per share as of this recording. Of course, that creates a lot of emotion from investors on both sides of the equation. Investors are getting excited about the momentum surrounding Nvidia stock and are piling in. And on the opposite side of the equation, those investors that have owned Nvidia stock for a while are feeling a bit nervous about the rapid rise in the stock price, feeling like maybe they should start selling, or maybe that there's a pending crash coming for Nvidia stock. As always, I feel like information helps ease a lot of investor concern, and it allows you to make information-based decisions instead of emotion-based decisions. So in this video, I wanted to elaborate on some of the big picture items surrounding Nvidia stock to help investors cope with the wide variety of emotions you must be going through about Nvidia stock.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the big picture things to consider about Nvidia stock and Nvidia's business is that demand for its products are absolutely soaring. Now, in the latest quarterly earnings call, now this is page 24 of Nvidia's latest 10Q statement. You can find this document on Nvidia's investor relations website. You go to your favorite search engine, type in Nvidia investor relations, and you'll come up to their website, navigate to their 10Q statement. This is the document I'm following here. This is page 24 on that document. Nvidia said that revenue growth in their second quarter of fiscal year 2025 was driven by data center compute platforms and networking for accelerated computing and AI solutions. The Hopper architecture demand is strong and shipments are expected to increase in the second half of 2025. So that's really interesting because they've already introduced their new generation technology, which is the Blackwell technology, which I will also talk about in a little bit here. But even though their next generation technology is launching as we speak, the company is still generating strong demand for the previous generation technology. And it's partly because the products are getting sold out so quickly that customers just have to take what they can get. If they can get Blackwell, they'll buy Blackwell. If they can't get Blackwell, they'll take the Hopper technology because demand for the products are so strong, and specifically for accelerated computing. This is data centers optimized for artificial intelligence. That's where the business is growing incredibly quickly. Now, if we look at all of the company's segments, data center, gaming, professional visualization, automotive, data center revenue, you can see here, is 78% of the company's fiscal year 2024 revenue. While the other markets, gaming is now only 17% of its revenue. Gaming used to be almost 100% of Nvidia's revenue, and now that data center has taken over, gaming is now a much smaller part of its business. Longer term, I expect something similar, or maybe not in this same magnitude, but I expect the automotive segment to increase to become a greater percentage of the company's revenue. Right now you have data center at 78%, and I expect this to persist for at least the next few years as the data center build out continues. But automotive, the developments in driverless car technology, or even assisted cruise control or assisted driving, where it might not be full self-driving, but it might have elements that help you park your car, that help you summon your car from a parking spot, that maybe help you drive in super safe conditions, but not in all conditions. All of that requires so much more computing power, and Nvidia, with its accelerating computing expertise, is poised to benefit from that trend. And I know many of you are bullish on Tesla and its developments of driverless car technology. I would say Nvidia stock could be a better option instead of Tesla stock if you're bullish on driverless car technology. And one of the reasons I say that is because Nvidia stock is trading at less than half the valuation of Tesla stock. And so you get the upside here without taking all the risk of paying so much for Tesla stock. Now, the company goes on to say that in the fourth quarter of its current fiscal year, which is 2025, they expect to ship several $billion in Blackwell technology. And so this is the latest generation technology I talked about. They're going to start sending it out in the fourth quarter. And since the company released this 10Q statement that I'm evaluating here, the CEO, Jensen Huang, has made several appearances and made several comments like saying demand for this Blackwell technology is insane. Insane, he said. And there's been rumors that this product is sold out for the next year already. So for all of next year, it's already sold out. So that's why the Hopper technology is still generating so much revenue, is because the Blackwell is just coming out and it's already sold out. So they go on to say that they continue to increase their supply and capacity with existing suppliers to support their demand projections. So of course, if your products are sold out, you're, as a CEO, you're thinking, okay, it's reasonable to increase our capacity so we can bring more supply to the market because we're selling out. And of course, they do that prudently. They don't just, increase their supply by triple. They talk to their customers and they ask them, what if we had a little more supply? Would you buy that up as well? And if they get a positive response from their biggest customers, then they'll go ahead and make those purchases. Remember, almost half of Nvidia's revenue in their latest quarter came from 4 customers. And these are the large hyperscalers like Amazon Web Services, Google Cloud, Microsoft, Meta Platforms, etc. These large hyperscalers that are building out artificial intelligence capabilities. And so when you have few customers, you can talk with them, you can have a dialogue and manage your supply based on the dialogue you have with your largest customers. So the increased purchase volumes and integration of new suppliers and manufacturers in their supply chain may create more complexity in managing these suppliers in volumes and in variation in production planning, execution, and logistics. And that's something to keep in mind. It's not easy to manage a business undergoing this level of growth. It makes it more likely to experience a big mistake because you're used to having your business growing at a certain level, and then all of a sudden Nvidia experienced a huge surge in revenue, 100 and 200% year over year growth in revenue. And this is already a $20 billion per quarter business. And so to experience that kind of surge in demand, it's not easy to manage. And Nvidia, so far, credit to management, credit to the CEO, they've done an excellent job so far in managing this surge in customer interest. But this is not an easy thing to do, and there's no guarantee that they won't fumble in some way, that they won't have some big error, because they're dealing with so much and they're operating at such a high level that a mistake is more likely. But they haven't had one yet. But what the company is saying here is that, look, you've got to give us some leeway here because we're managing such a difficult transition year where our business is surging. So don't be surprised if there are some difficulties. Don't be surprised if there are some missteps here because of what we're going through. And I think that is a great way to look at the business right now from an investor perspective, is that demand is absolutely booming. Products are sold out for like the next year, probably the next 2 years. Demand will be increasingly elevated. But at the same time, managing that is difficult on the execution side of the business. And then you've got to look at this business a couple of years ahead and try and figure out if, once these data centers get built out, if revenue for Nvidia is going to collapse, or will it just slow down in terms of year over year growth rates, but still remain elevated. And so that's what, as investors, as analysts, as those that are researching the company, that's what we're trying to get at here. Every quarter, as more data comes out, I'm trying to evaluate what demand looks like for artificial intelligence. And so far in the last week and a half, since the most recent earnings season got underway, I've gotten several data points that suggest demand for artificial intelligence will persist beyond this year. And I got these data points from some of the largest AI supported companies in the world, including Taiwan Semiconductor Manufacturing Company and ASML. And so it's looking good right now for Nvidia, but investors keep in mind that it is difficult and challenging to operate a business going through this level of unprecedented growth. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.